What's up, guys? Welcome back to the Block Hash podcast channel. Today, we're going to be looking at 1inch, the 1inch network, and analyzing the chart after they announced that they're going to have a crypto debit card released. That was a big partnership that's moved the price a little bit. I thought it might be worth jumping into this chart, so I wanted to share this with you today. We're going to do a little bit of analysis in the short term and the long term, and I'll give you my predictions at the end. So with that said, we'll get going here in a second. Before that, make sure to check out our subscriber, but also our sponsor, Bump Social. They're building a fantastic new social media app that will be revolutionary for users and creators and influencers, brands and advertisers, for engaging with a community, engaging with a user directly, and being able to have a more authentic and interactive environment online socially than other social media platforms without the restrictions. So check them out in the description down below for this episode to learn more. We'll be on there as well. Also check out our YouTube channel if you want to become a member and get exclusive access to all of our videos, content, and episodes before anybody else, for the price of a cup of coffee a month. Check that out. All right, let's take a look. So here we are, 1inch. On the weekly here, we've seen nice movement since October, like the rest of the crypto market. That's a common trend. But if you look at the long term, obviously 1inch has been much better. It has been like is higher than $7, way higher than $7 relatively to its current price. So there's a lot of potential. When it came out, it definitely just tanked. But that's not denoting what it can do in the future and its possibilities. Right now, it's been a strong uptrend, trying to break through some resistance areas around 58 cents-ish. On the weekly, maybe we'll get there. For now, let's zoom into the daily, expand this out a little bit, give you guys a little bit of an idea of how it's performing right now. Assuming we are in a crypto bull market for altcoins, we know we are for Bitcoin, but where are we at for the altcoin market? That is the question. So here on the RSI, we're going to see that things are pretty choppy. We do hit overbought a few different times here between October and now, the last one being, early March, first week of March, when the rest of the crypto market popped up. And then things kind of slid sideways. And right now I'm going to do this, create some resistance areas for you to kind of give you an idea, and a little bit more long term. Let's do this. Oop, what did I do? Okay. So we're in an uptrend, moving slowly on the daily. RSI has been kind of choppy, but we seem to hold somewhere in the middle here, which is good to see. I don't think we'll go much lower given where the RSI has been. The last time it was oversold was maybe September, harshly was maybe June. So things look pretty good. It looks like it's moving in the right direction. We throw on the Bollinger Bands, we can see that every time it tries to punch through, it moves a little bit higher, but it hasn't been able to force like a really large sustained breakout. You could argue this happened maybe around February 24th and then went through the first week of March. You could argue this happened maybe towards right before Christmas, and then that led into second week of January, but nothing truly noticeable. Big bar coming in today as we look to potentially revalue 1inch. But the biggest news is, and the good thing is, that we're holding a longer term trend of higher lows, and there's not too many ceilings here. So this ceiling that we need to get through, fix my camera here. Don't lose me. Yep. All right. I bump it sometimes, and I mess up the autofocus. So the woes of being a content creator, huh? All right. Let's go ahead and back out of the RSI. Let's go to the MACD. All right. On the MACD, we are still pretty below, not below the volume bars, but below the moving average, looking like we're going to go test this once again. I'd say that this would be a failed test and maybe we'd hold this trend, but it depends. Are we going to close above this descending trend line here? If we do so, we can maybe consider going back up to retest 70 cents. where we were in the first week of March, second week of March. Right now we are hovering around 61 cents, which is just above. We need to close that today and have a positive day tomorrow. If we can do that, then we can invalidate this and say we're still moving up. We can also say that we're definitely supporting this higher low trend line. If not, then you're going to see something like this. If we don't close out higher, have a good day tomorrow, then we'll come back down here and retest this again. And hopefully we hold it. I don't like retesting things over and over and over again. Like 1, 2, 3, 4, 5, 6, 7 times is enough. We got to break to the upside. We got to make a move at some point. You put the Bollinger Band away, look at the EMA. We are squarely since October above the 20, 50, 100, and 200, flirting a little bit with the 20 and the 50, but for the most part, staying above it. We don't stay below 20 and 50 too long. That's good. That denotes a healthy move to the upside, strong move to the upside. We can back out here a little bit. Let's see if we can get some ceilings in here. Seems to be a strong one around this point in time, or this range, excuse me. Then what we'll do, actually, we'll get rid of that. We'll do something even better. Let's go to date range. And let's go. This is much better than trend lines, honestly, guys, because nothing is true when it comes to trend lines. They are relative and they are helpful to look at, but there isn't a solid, 70 cents on the dot is the resistance ceiling, or 51 cents on the dot is the floor. It doesn't work like that. So trend lines just give an idea of actual direction and we look at them roughly. But if you want something better to look at, you should just do like a range. So looking at this date range, you can say everything from around 60 something cents. We can adjust it a little bit. We'll say around 58 cents. 58, right? Yeah. 58 to 59 cents, all the way up to 71.5 cents or so, is our resistance area. All right, because we have lower resistances here on the 2nd of February 2023, in March and April 2023, as well as July 2023, and then here again, here in March 2024. We had it up here high in March 2024, and then end of March 2024, and then now we're seeing it April 2024. So we need to clear this range more than we do a single line. If you look at a line, it's really hard to denote if we've cleared it or not. It takes a couple days. So this is even better on the weekly. But if we can clear this range, it's pretty clear in my mind that we're through all these potential resistance areas for a ceiling, and we can start to turn that into a new floor. All right, we get through there, and then our next range is going to be probably something like this, all the way up to between 79 and 90 cents. We need to bust through that, and then it's pretty much open air until we get to maybe $1.28, maybe $2. But these are the two biggest areas that we got to get through, because these look like stepping stones down. So this is a stepping stone up. We have to clear this to get to the second stepping stone. Who knows? Crypto's wild. Maybe we'll just blow through it with a God candle. Entirely possible. I'm not going to say it's not, but we're practical here, right? We're pragmatic. We're not going to look at bullshit. We're not going to look at fake price predictions. We're just going to reasonably take a look at things. So this is what I'm seeing. All right. You guys can do the charts as well, and you'll probably come up with something similar. But that's what it's speaking. In terms of short-term predictions, in my opinion, I think we need to see a bit more. I think me looking at this today is probably too premature. We need to get through this range. If we can't get through that range, then I don't know where we're going with 1 inch. If we're going to follow the pattern of the crypto market itself, maybe in the short term, by the time we get to the end of summer, we should be close to 90 cents if we can get through this first range. But this needs to happen soon, all right? Because this triangle, this wedge here, is really important. Because if we don't clear it and we hit this line again, this ascending higher lows trend line, if we break this, we're likely coming back down to 45 cents. All right, because there's nothing else really supporting it. Maybe 45, maybe 41 if you want to draw some ranges in here, some tiny ranges, like we'll just do it for the hell of it. You could say that there's a range here in which it could stop out, but we want the trend line up. We don't want the ultimate floor. All right, so we want to be optimistic and we want to look for this trend line up. If we break that, it's not looking too good for 1 inch. So we need to hold this first one, and we need it to break up at some point out of this wedge through this area of resistance. And if we can do that, let's say here in April, then I think there's a solid chance that we can be around 90 cents by the end of summer. Okay, that's a good move. That's pretty solid. That's going to put you around, from today's price of 60, we'll say. That's a 50% move just by summer. Okay, that'd be nice. And that'd be in the right direction and a stepping stone, because we have to clear this stepping stone, in which case maybe we come up, get there by the end of summer, then down. Like, don't look at the dates. And this is actually, let me see if I can make this a bit more realistic. We come up here, okay, and then we do something like that. Entirely possible. That's what I'm thinking. All right, and then long-term price prediction. I don't think we're there yet. Again, you got to keep in mind 1 inch has been much, much higher, and it's wicked up as high as almost $9. It's spent a good time between $1.80 and $4. That's a very wide range for the price movement we've had. And since June of 2022, it's been dead. So now we're getting some movement from it, but I don't know if it will go this high again. Reasonably, if we're in a bull market, we should be able to at least come up and retest maybe this area of resistance. Again, I will draw a date range for this. I've got some highs here. So let's go like this. Okay. In the long term, we should be able to maybe retest anything between $1.19 and $2 itself by the end of the year, long term, maybe going into 2025. That would be a reasonable next leap upwards to retest. Other than that, it's pretty much open sky. Like, there's some resistance area in here, but again, this isn't a very long chart history, so you can't say that this is legitimate. It could do something absolutely bonkers. It could go way higher than this. I don't know. It could also be a dud. It could come up and come back down and maybe settle here for the next 4 or 5 years. That happens to a lot of cryptos as well. They get overhyped or overbought in the very beginning, or they come out with high valuations and then they tumble and tank. It's very normal. Happens in the stock market too. But don't be discouraged. I would rather see 1 inch slowly make its moves and take its time, and by the end of the year find itself around $1.20, $1.19. If it can do that, that's a solid progressive move. And then can it stay up here for a while? If 1 inch can find a way to eventually make it up here and then just hang out, move sideways, chop around before moving up, that would be best case scenario. Because worst case scenario is it comes up and then crypto market ends, bull market ends, and just comes tumbling back down, and we're sitting here around 61 cents again for another 4 or 5 years. Nobody wants that. So my short-term prediction is, and this is really a big contingency, assuming we get through here, we should be able to get we should be able to get anywhere between 80 cents and 90 cents by end of summer. Okay. Assuming we keep the trajectory. Long term, I don't see why we can't get to $1.20, maybe just under $2. If we go that high, and I'll just show you the percentage move, you can do the math in your head. If we go from 61-ish to as high as $2, oh, I used the wrong one. Silly me. Silly me. We want price range. Let's say we go from 61 to here. That's 225%. That's a nice gain, even on the lower end, 91%. That's pretty nice too. So there's a lot of potential to make money investing in 1-inch. A lot of potential to hold this long term as well. It's already beaten down, so why not throw a little in it? Again, this is not investment advice. This is just my personal opinion. This is educational, and this is to help you learn how to read charts. This is to help you understand 1-inch a little bit better and to do these on your own. So I suggest that you do these charts on your own as well and see what you see and come up with, and you can match them up with mine if you'd like. But don't make investment advice because I'm doing a chart on 1-inch. Make investment advice. Don't take any investment advice. Make your own financial decisions. That's all I'll say. But I do see opportunity here, and I'll leave you with that. And I think this is exciting. I think 1-inch is also a network that's developing quite rapidly and has some very interesting partnerships and could be a very valuable asset to hold in the long term. It's got a very good DEX as well. All those play a factor into the price over the long term. So keep an eye on that stuff. Keep an eye on developments and what direction they're taking things and how they continue to evolve, and that'll give you your answer. Anyways, that's it for today. Make sure to hit the like button, hit the subscribe button. If you have already, thank you for subscribing. I really do appreciate it, and I will talk to you on the next video. Cheers.